Okay, very good morning. Hope everyone is well and had a good weekend. Monday the 27th of November. Good to be back. Stephen, thank you. Just having a quick overview then of what we're going to discuss here in the next 20 minutes or so. We'll have a look at the weekend's major news flow, a couple of updates for Black Friday performance, as that might get a bit of a look in as US participants really fully return to market after their probably extended weekends. I wasn't here last week, but I'd imagine the usual routine is that Friday would have been typically quite a quiet session, as most people would have been off in the States. We'll have a look at some updates on Brexit. We'll have a quick look at Bitcoin as well, which is seen getting close to a key level on the upside. And then we'll have a look at the calendar as well, forthcoming for the week, and some key things that traders will be looking out for. So just having a quick look at the markets this morning, and got a little bit of dollar weakness as Europe's come into the market. Haven't really seen anything particularly fundamental to pin that move to, but we've moved below the bottom end of the range we were trading in Dixie at the end of last week. So consequently, both major pairs here in the top left hand corner, euro dollar and cable, have been edging up since Europe has come in. The euro currency pair managing to get above what was the high print at around the European close on Friday session, so that 119.59, and that's pretty much where we've pulled back to at the moment after that initial run through that level earlier. So holding on to a bulk of the gain that was seen on Friday session thus far. We'll have a look at the pound and the Brexit story in a second. There's a few updates, nothing monumental, but certainly in the context of the ongoing negotiations, some things to be aware of. But starting off here with the S&P, just having a look then, you can see how psychologically last week that 2600 level was quite key. You had a bit of a run up here, would have been the 21st. So Tuesday last week, push and then an eventual test and resistance found at the level, and you can see there that really defined that move both on Tuesday and Wednesday, looks like last week, before the eventual break came towards the latter part of the week, where we've hit a fresh all-time high now printed, well, would have been overnight, the recommencement of trade in the Asia Pac session. 03.5 now, we've pulled back to sit at that 2600 level. So I remember when we were pulling back not so long ago, there was a certain, I think it was when we were down here in middle of November, certain Sam North tweeted, I saw, when it was at 2550, he reckoned it was going to go 2600, and he wasn't far off wrong in terms of it got there in the end. So fresh all-time highs, and one thing I guess with the S&P which is quite interesting and might influence some individual stocks at the open later on when Wall Street gets underway is Black Friday results. So you don't really need to wait until the companies themselves start coming forward with data, because there's various different analytics firms which release their own tracking data on the day. Now, one of those is basically said that Black Friday and Thanksgiving online sales in the US surged to record highs. Shoppers bagging deep discounts and bought more on their mobile devices. So looking at the actual numbers, it was pretty impressive. US retailers raked in a record $7.9 billion in online sales on Black Friday and Thanksgiving. That was up basically 18% from a year ago. So sales performance, 18% improvement on this time last year, which is pretty impressive by any stretch. That was according to Adobe Analytics, which measures basically a summary of the largest 100 US web retailers. And so it'd be just quite interesting to see how some of those associated names, when we get open on Wall Street at 2:30 in the cash market later, how they perform, whether it helps prop up the market at all, from a sentiment perspective at least. Other headlines at the weekend: Brexit continues. Needless to say, I was away all of last week and we really haven't moved on a great deal. The Sunday Times typically tends to be the kind of benchmark of breaking the latest news week to week, and the latest this weekend was that the UK will improve its financial settlement offer to £40 billion, but the difference here being the exact figures will not be made public. A lot of people reading between the lines then saying that Theresa May is doing this purposefully in order to mitigate any anger from her own Conservative Party about giving Europe more money, essentially, and so wanting to keep the actual figure secretive, at least for the time being. But we all know, as per the leaks that have surfaced in the last 2 weeks, that figure now is at 40, if not just above. The FT has added that Theresa May will present an improved offer on the 4th of December, and obviously this comes then ahead of the mid-December EU summit, so timing is key. The one still difficulty, though, that seems to be providing the barrier to progression of the negotiations at this point is, of course, the Irish border. And this is the latest we've had from the weekend. The final decision on the Northern Irish border cannot be made until a UK-EU trade deal has been agreed. This is according to Liam Fox, who's obviously the Trade Secretary, and despite warnings from Brussels that trade talks cannot proceed unless an agreement is reached within days. So this is where, if you were, I guess, looking to trade the news, if the situation were to arise for any movement in the pound, agreements or compromises around what the situation is with the Irish border could be quite key, because once this gets resolved, then if the UK puts forward the 40 billion, certainly this could be met as a net positive sterling in the short term. But interesting to see how this plays out. I wouldn't be expecting, I'd imagine, anything to happen today, but possibly towards the latter part of the week if the timetable is said to be true, and she starts pushing towards basically Saturday, it's going to be Monday next week. She'll look to put forward that new tabled offer of 40 billion. Then you'd be expecting something on the Northern Ireland border issue towards the end of the week, I would imagine. Other things are looking over in Germany. Seems to be a bit of progression, certainly since I last picked things up officially, which was over a week ago. It seems to be that Europe's biggest economy is edging closer to a new government over the weekend as Angela Merkel began haggling with the Social Democrats over the terms of a potential partnership. So I think the market's fairly calm over the situation. I don't think anyone's particularly panicking a great deal, and as far as I understand, that was how the market perceived it as well back on this time last week, when, as I understood, the pound or the euro dropped on the back of she had gone past her self-imposed deadline, but then rallied quite quickly on the back of in reality, this doesn't really detract from the point that she is going to remain Chancellor, and at some point she will forge a coalition, and it's looking more likely now that that Jamaican coalition, although that still is a possibility, the discussion seems to have moved now to the SPD at this point. A quick look elsewhere, and I wanted to quickly talk about oil. This was the latest comment which I've seen this morning, and of course Novak is the Russian energy minister. Now Novak has said this morning that almost all OPEC plus parties are in favour of a pact extension. I think this is completely unsurprising. This fits the narrative that not only Russia but the Saudi officials have been pushing, both from an oil ministry point of view as well as the government under MBS. So this is one of the things that I think is quite interesting for this week, because of course we have the OPEC meeting happening on Thursday, the official meeting in Vienna. Now, just having a look at oil prices here on a bit of a longer time frame, and this morning we are down slightly. We're down about 60 cents below pivot, just taking back some of the fairly substantial gains that we had predominantly in the second half of last week. But if we look at oil on a slightly longer time frame, obviously we're getting very close to the psychological $60 handle in terms of West Texas Intermediate. And I think it's going to be particularly interesting as we get closer to this meeting coming up as to what happens to the price of oil from here. Because if you look at oil and its rally from, if I just mark up a few points, and really we're looking at from late August, beginning of September, which was when we were trading around a $45 handle to where we are at the moment, highs at just over 59 bucks. This is a weekly chart. Now, we've had a really impressive rally over that period. If I actually mark it up to give you a percentage terms, we've rallied in crude 30%. And a lot of this has been pinned on the back of the fact that, more likely or not, on this Thursday's meeting, OPEC are going to extend their deal, which is due to expire at the end of Q1 of 2018. They're going to extend it throughout 2018. So continuation of the same size of cuts, but for a longer period. And so the market is repriced quite aggressively. The fact that the Saudis and Russia are both singing from the same hymn sheet has made the market believe then that this will be a compliant agreement, so to speak. And so oil has rallied. But those of you who've traded the last few OPEC decisions, the official meetings that they have in Vienna, will know that we tend to have what's in a very longer time frame, a buy the rumor, sell the fact type situation, where that what I think will be interesting is that the last time they made this agreement and they extended the cut, oil was rallying in the weeks into the meeting, and then it sold off quite aggressively. There's almost confirmation of what had been promised, everyone booked profits, and then we moved quite substantially lower. What's interesting here is the fact that technically we're so close to a psychological level of $60, kind of further, I think, elevates this expectation that potentially, even if OPEC deliver what they're saying, then all the more reason that you might get a lot of players just booking this move that's occurred over the last few months, and we could see a decent pullback in oil on the back of it. One thing we have seen, I'm not sure if you caught this late on Friday, but hedge funds have gotten less bullish on Brent ahead of the OPEC meeting. So basically what they're saying then is that hedge funds are playing it cool. They've reduced their bullish stance on global benchmark for a second week as they brace for OPEC's market swings, where prices rallied too much before a high-profile meeting of the group, only to slump as the announcement fails to surprise. So if OPEC do at this point just an extension, I think more likely or not, you're going to get a fairly aggressive pullback in prices, just to take a little bit off from this steep rally that we've had. If we do pull back, the kind of more logical place for that move, I feel, is down to around the $55 handle when looking at this on a weekly basis. 55.50, just pulling us back to around what was the year-to-date highs of 2017. You can see after we breached that at the end of October, it has also provided some support in mid-November. And so a pullback to that point, I think, would be completely unsurprising, and I think would also still fit within the parameters of what OPEC's and non-OPEC's intentions are, which is to still support the price of oil. Keeping it within this band of 55 to 60, I think, keeps everyone happy in that respect. Some other things though, if OPEC were to surprise, then this is quite a good chart, because what I'm looking at in particular here is, as you will know, as part of the existing framework of the deal, both Libya and Nigeria are exempt in terms of they can produce as much oil as they see fit, or as they can operationally do at this point. Now Nigeria, from the beginning of the year, January 1st is when the existing OPEC deal came into fruition, Nigeria have increased percentage-wise their output by about 12%. But check out Libya. Libya has produced their output, or increased it, by nearly 70%. So this equates to about 400,000 barrels per day. So if they were to take the deal a little bit further, they could, of course, bring these two countries into the fold and give them a cap. That might mitigate then the size, if any, of the profit taking, because then it's kind of a slight escalation, at least, of the tightness of the deal, so to speak. So Thursday, that's going to kick off, but as those who've been in the market long enough will be fully aware of, you don't need to wait until Thursday in order for this OPEC decision to be known. Oil ministers will be speaking throughout the next coming days, and usually by about Wednesday afternoon we already know exactly what the decision will be. And pretty much we know that at this point anyway, because it's been ratified by Novak already, and the Saudis are of the same stance that all OPEC plus parties are in favour of a pact extension. Anything other than that, let's say, planning for the unexpected, if they do not strike a deal and they don't make an extension, well then this is going to be very interesting. And then actually this would provide probably one of the best trades of the week if that was to play out as a scenario, because you would get a significant pullback in oil. I would imagine then that 55 that we were talking about, which was pulling us back down, this is a daily chart, to the mid-November price point, we could easily get down to there and below before the end of the week, I would imagine, if that was to materialize as a situation. Because the market has built up expectation that we're going to get that extension. Okay, moving on, another news story. Not going to touch on this for too long because it's an ongoing situation, and I don't think anything's going to happen immediately. Probably you're going to be looking more to the Christmas period and into the end of the year before something more concrete gets done. But Republicans rush to build support ahead of Senate tax debate. And so this just continues to drag on at the moment, so kind of simmering in the background. One thing though that I do need to mention today, and again, as I often stress, it's not something which we personally trade here at Amplify, but I'm sure when the CME start covering futures, it could be something interesting to look at. But Bitcoin mania continues. What I'm looking at here is a run up to highs which we've printed really just a couple of hours ago. This was the record high. Basically we breached 9,000, we got all the way up. I think the high it's got to is about 9,700. We've had a bit of a pullback, but just incredible looking at this chart over 2017, where we're up close to 900% year to date now for Bitcoin. You heard me right, 900%. I think the average move of the S&P for 2017 on a daily intraday basis is less than 0.2%. Just to put it in some context. The S&P for the year, I think, is something like 13% at the moment. But looking at this chart, obviously the big handles act as big psychological levels. We've seen this on multiple occasions, going through 6, through 8, and then this 9,000 break and this chase of 10,000. One just feels, from a behavioral point of view, that 10,000 just feels all the more of a larger barrier psychologically than maybe 9,000, just given the first double-digit increment that we're about to hit. None other than that from a psychological perspective. So I do think this is going to hit 10,000 very soon. Actually, if I just bring up my Twitter feed, I did do a poll last night because I just wanted to see when you guys thought we would hit 10,000. I actually think we're going to hit it today. Going to put it out there. Bitcoin 10,000 today. But I asked you guys what you thought, and actually the majority of you think we're going to hit 10,000 by the end of the week. That's the end of this week. 29% think before the year end, and then the smallest amount think actually it's going to be in 2018 when we're going to hit 10,000. The reason why I think it's going to be much more rapid than that is purely down to the fact that how the market behavior typically plays out, that we're so close to the level now. I see no reason other than that people will be up chasing that mark very quickly. And just turning on the various news stations this morning, this is all everyone's talking about, is this 10,000 level. So for it to hit that level today, I think would be completely unsurprising, and is actually my expectation going forward. One thing though that I did see, which was very interesting about Bitcoin, as much as I don't want to read too much into it. Now this map This is electricity consumption globally versus global Bitcoin mining electricity consumption. So the countries in yellow are basically those that have a lesser electricity consumption than what it is to mine Bitcoin. Now let me just break this down so it makes a bit more sense. So an explanation of this and how Bitcoin mining consumes electricity. So mining power is high and getting higher thanks to computational arms race that's going on, this who can mine it the fastest. So the required number of zeros at the beginning of a hash is tweaked bi-weekly to adjust the difficulty of creating a block. The more zeros, the more difficulty. The Bitcoin algorithm adds these zeros in order to keep the rate at which blocks are added constant at one new block every 10 minutes. The idea is to compensate for the mining hardware becoming more and more powerful. When the the hashing is harder, it makes more computations to create a block, and thus more effort to earn new Bitcoins, which are then added to circulation. Now, to put this into real terms, the DigiEconomist Bitcoin Energy Consumption Index, as of November 20th, Bitcoin's current estimated annual electricity consumption stands at 29.05 terawatt hours. That's equivalent, so check this out, that's equivalent to 0.13% of the total global electricity consumption on the planet to mine Bitcoins. While that might not sound like a lot, it does mean that Bitcoin mining is now using more electricity than 159 countries in the world. This does include, I think it's the likes of Ireland and Nigeria. If that growth rate was to continue and countries did not add any new power generating capacity, then Bitcoin will consume all of the world's electricity by February 2020. So, not calling the top or anything like that, I'm not that silly, but quite an interesting point about obviously the way that the technology works in its very overview simplistic way is that obviously the blockchain getting longer and the amount of computing power necessary to continue that technology to develop in its use, then obviously electricity along with that needs to increase exponentially. So just quite an interesting point that I saw this morning, and I thought I'd point out. But I think in the short term, if we go back to that main chart here, I mean 10,000, let's face it, that's going to go at some point or another. Now, one of the interesting things I was listening to some of the commentators talking about on the TV this morning was about the fact that really this is still very much a speculative and not a mature market. And so once then CME futures are available in the coming months, and once it becomes more mainstream, does it then start to really ramp up even further at that point? So 10,000 though, I guess one thing to be careful of is that I did see quite a funny meme this morning of a picture of a granddad smiling with his cup of coffee going, I've just got long Bitcoin at 9,700, because inevitably something to be wary of is that when we hit 10, it would be no surprise for it to fall to 8,000 before then we break it and we move to the next kind of level, wherever that might be. So certainly, if you remember the patterns that we've seen, when we hit 9,000, we pulled sharply back, we collapsed about 30% before then we rallied to 8, now to 9. You know, it tends to follow these big patterns at these levels, so just to be aware of. Okay, rounding things up, looking at the calendar for today, as quite typical for a Monday, it's pretty quiet, not too much going on today, but this week certainly, if I switch over to here to look at the weekly highlights, there's quite a few interesting things going on. So for today, US new home sales in the afternoon, not really looking for that to be too groundbreaking, but we do have what could be interesting. Bank of England's Ramsden is speaking and a couple of Fed speakers. Going on to Tuesday though, the most significant event likely to be Fed Reserve Chair nominee Jerome Powell That's his confirmation hearing. We'll also get wholesale inventories from the US, the weekly API crude oil inventory data. Wednesday, then things start to get a little bit more interesting. We get the next reading of US GDP, core PCE numbers, the oil inventory numbers as well from the Department of Energy in the US. You've also got Janet Yellen, testimony before the Congressional Joint Economic Committee in Washington in the afternoon. I was reading a few things at the weekend, and as far as I understand, now that Yellen is, stepping down, if you like, from the chair position, she's now reverted back to her more typically dovish ways. So rather than having to kind of manage and steer forward guidance of the Fed going forward, now that she is stepping down and she becomes less important, and Powell now takes that lead, then she can actually start voicing a bit more of an opinion. And typically that tends to be more dovish. So it'll be interesting to see what she has to say on Wednesday. On to Thursday, probably the most busiest day in terms of scheduled events. Not only do we have that aforementioned OPEC meeting in Vienna, where we should see supply cuts maintained and creating some headline noise for WTI crude. We've also got some German data, the latest employment numbers, retail sales. Eurozone, you get the inflation rate. Same case as well, looking at PCE numbers from the US, which will be very important with the weekly jobless claims and personal spending. And so quite a busy day on Thursday, and then Friday wrapping things up. You get manufacturing PMIs globally through Asia, Europe, and in the UK, and you've got US ISM manufacturing in the afternoon with the Baker Hughes rig count as well that people are monitoring quite closely in the commodity market at the moment. So quite an interesting week, I would say. From a calendar perspective, probably today is going to be one of the more quiet ones, though. Probably going to be more interesting from an event perspective tomorrow when we hear from Powell, and then Thursday when we get the OPEC meeting in particular with Janet Yellen, also going to be speaking on Wednesday. In terms of today's session, I guess keep an eye on US equity markets. Could have the propensity to be quite bullish today, just given a response to the performance of Black Friday and Thanksgiving being so strong. Again, tracking data would suggest an 18% or so year-on-year improvement from 2016. And just looking at the SPOOs here, we are up in close proximity to retesting already that 03.5 level, which was printed overnight. And so elsewhere, again, a little bit of dollar weakness, but I wouldn't read too much into that. There's nothing really too fundamental behind it. And so we've already seen Euro, dollar and cable just petering off from that initial rally when Europe stepped in. And then Bitcoin, of course, keeping an eye on the 10,000. Okay, guys, going to leave it at that. So I hope you had a good weekend. Have a good day and a good week ahead. Just finishing off, Bund just breaking through Friday's lows, so just printing session lows now. So any questions, just let me know. I'll be in the chat room all day. Thank you.